Good afternoon, and welcome to part 2 of the review of OGE Form 450s. My name is Patrick Shepard, and I'm very pleased to be joined today by Cheryl Kane-Piasecki.
Hi, Patrick.
Hi, well, we're back.
We are back. Just a couple of days.
So what are we going to do today?
Well, today we're hoping that you had an opportunity to take a shot at the 450 exercise that we assigned to you on Tuesday. And what we're going to do today is we're going to walk you through that review.
Okay.
We're going to discuss each line of the 450 where there is an asset or some sort of interest listed. We're going to discuss any questions we have about whether we have sufficient information. We're going to discuss whether or not we think there are any substantive issues with respect to that. And ultimately, we're going to try to familiarize you with the sort of complexity of the analysis actually that is involved when you have what may on its face appear to be like not such a complicated 450, but it actually belies some of the analysis you're going to have to do
kind of a complex
today.
450. And I remember on Tuesday it took us almost 45 minutes just to look through the form the first time.
Right.
So we probably have a lot to get to today. So maybe we could flip over to the slides and just get started.
That would be great, yes. Okay, so here we go. All right. Okay, now we're in the money. So you should have the OGE Form 450 up in front of you. As we discussed on Tuesday, the position for which we are doing this review is for the Deputy CIO position. So we want to have that in the front of our minds, primed for that as we begin the review. And we also want to keep in mind that this is a new entrant, that the reporting status is a new entrant. So we want to be aware that some of the things that we're seeing may very well be unusual in that they are things that precede the person's onboarding to government service. We would like you to have the worksheet in front of you. Hopefully some of you may have used this when you were doing your review. We have given you a completed worksheet on the IEG page for if you would like to pull that up and peruse that. Those contain some of the talking points that we're going to be looking at today, some of the questions that we're going to be asking today. So if you'd like to take a look at that, you can. But certainly we want you to be able to take notes of your own as we're walking through the review. So we're going to start with part 1 with the common interests we typically see on part 1 are securities and these are the things we're going to be concerned about, looking for any kind of securities or sector fund holdings that might conflict with a deputy CIO position, whether there's any current or prior non-federal employment for our filer, and whether or not there's any spousal non-federal employment and related assets or income for the filer. And I'm going to turn it over to Patrick, who's going to take us through the first couple of examples on part 1.
Yeah, no, absolutely. Thanks, Cheryl. We're going to take a look at part 1. And as we discussed on Tuesday, one of the things we want to be mindful of is identifying those things that appear to be most likely to create potential conflicts of interest as soon as possible. We have someone who's a new entrant, which means they're probably on the job.
Yes.
So they're on the job performing the duties of their position. And that means that there's a risk that if they've disclosed things that are potential conflicts of interest, we may need to take immediate action to make sure that they don't turn into actual conflicts of interest. So if we recall back to just a few minutes ago when we were looking at the cover sheet, Jill, our filer, is Deputy CIO. So presumably that's a chief information officer, someone who is involved with the running of the IT systems and processes at our agency. So anything that presents sort of a nexus with the technology world, we're going to want to be particularly mindful of. And we see here on the first page on lines 3 and 4 that we have 2 such entries. We have something called the First-Hand Technology Opportunities Fund and something called Vmware. You might not be familiar with these, but just looking at them and having some familiarity with Vmware myself, these stand out to me as things we're going to want to take a close look at. And so at this point, we have some choices to make. On the one hand, we could just go back to Jill and say, tell us what these things are. We think there's maybe a problem. Or we could do a little bit of digging ourselves. We could go see what it is we can learn about these things so that we can ask maybe some more targeted and helpful questions and arrive at a resolution to the potential for conflict here a little more quickly. So let's start with our first holding, the First-Hand Technology Opportunities Fund. So that has fund in the name, and that's usually a pretty good indicia that it is a mutual fund. And here we have on the screen for your convenience the write-up on mutual funds from the OGE 450 guide. And this guide is really important if you take nothing else away from this class except that this guide exists and that you ought to keep it on your desk when you're reviewing these things and that it contains useful information. We will have made a great contribution to the accuracy and completeness of your reviews. But this is an example of how you can use it. So we can go to this entry on page 87 about mutual funds, and it gives us some information. It tells us what a mutual fund is. It tells us that they are created under the SEC Act of 1940. It describes how they function, and it tells us about an important distinction that we have between kinds of mutual funds. And this is a distinction that matters for the application of the criminal conflict of interest law that we find at 18 Usc Section 208. And that is the distinction between sector mutual funds and diversified mutual funds. So a sector fund is a fund that has a stated policy of concentrating its investments in any industry, business, single country other than the United States, or bonds of a single state within the United States. And this is important for two reasons. If something is a sector fund, it must be reported on the OGE Form 450. And that's not an accident, because it is also not necessarily exempt from coverage by the conflict of interest statute. We may have some de minimis relief we can think about, but there is a potential for conflict of interest with a sector fund. A diversified fund, so this is a fund that does not have a stated policy of concentrating its investments in any industry, business, single country other than the United States, or bonds of a single state within the U.S., are not reportable. And the reason they're not reportable is because they are exempt from coverage under 18 U.S.C. Section 208. OGE has issued a regulation that basically says if you have a financial interest in a matter as a result of owning a diversified mutual fund, you can never have a conflict of interest. Which makes sense. If we were looking at the say the S&P 500 fund, it holds 500 different companies. The potential for a severe conflict there seems very attenuated because of the diversity of the holdings of the fund. However, with a sector fund, if we say we had a pharmaceutical sector fund, we could see how that could pose a conflict of interest, if we had a matter involving the pharmaceutical industry. And then we also have some information here about more guidance. So if you need to make a determination about whether something is or isn't a diversified fund, we have a diagram from August 2000 and a legal advisory from June 2015. So that's for your convenience. So we have a fund here, and we need to find out whether it is a sector fund or a diversified mutual fund. Because it's reported, it seems the filer may have thought that it was a sector fund. And here we see from the definitions on the OGE Form 450, the definitions because it helps our filers to determine whether or not something needs to be reported. We also have the citations for the various definitions in 5 CFR 2640. So let's take a look at the First-Hand Technology Opportunity Fund and see if we can determine whether or not it is a sector or diversified fund. And I'll let you in on a little secret, and that's that technology funds can be especially sticky wickets. The name isn't always super informative or sort of dispositive. We have to do the work that the reg requires us to do and go look at the stated policy. And we might find that in a number of places. We could find it in the prospectus. We could find it in the investment strategy section on a financial services website. We could find it on the website for the fund. But we're going to need to go look and find out what is it they say they're trying to do here. So we've done some of that. So we have the First-Hand Technology Opportunity Fund Strategies and Statistics. And it has some information for us. It says the fund invests primarily in equity securities of high technology companies in the industries and markets that we believe hold the most growth potential within the tech sector. So this is kind of interesting.
Well, I think it's interesting, some of the language here, that if we parse this out, I think you can get tripped up on some language that's not really material to your determination. The fact that they mention the technology sector, might lead you down a rabbit hole of, well, they're calling it a sector
Right.
fund, or they're making a reference to technology sector, that's sufficient to determine whether or not this particular fund is a sector fund.
Right. And when we go back to our definition of a sector fund, we say that it has a stated policy of investing in a single industry or in one country outside of the United States. So that's a bright line. And here we're saying industries and markets, so plural. And I think when we think about technology, we can think of, there are a lot of companies that use technology. Virtually all of them do, right? We have biotechnology, we have information technology, and I think each of those on their own may be sectors. They may be industries, biotechnology or information technology. But here we have multiple industries, so we could keep looking and look at some of the holdings to get a sense of how they're implementing this guidance. So here we see the 25% in software, internet, networking, consumer electronics, semiconductors, education, social networking, renewable energy. So these seem to span multiple industries. Renewable energy is a separate industry from the internet, which is separate from consumer electronics, which is separate from semiconductors and education. So it looks like even though this is the Technology Opportunity Fund, we might actually have a diversified mutual fund here.
Absolutely, and I think don't be confused by the fact that this fund does invest in software and it does invest in internet and network type of things, but it's not concentrating its investments in that particular sort of aspect of as a single industry.
Right.
It is investing in that, yes.
Right.
But also in a host of other industries that are utilizing technology and industries that are not likely to have any nexus to our information technology folks in our agency.
Right. So if we had a fund that said it focused in one of these industries, that said we focus in consumer electronics, we would have a sector fund, and we would have to consider it under the available exemptions for sector funds. But because we have more than one, we have a fair number of industries represented here. And most importantly, when we go look at their stated investment policy, they say that's what they're doing.
Yes, exactly.
They're looking for opportunities in the market generally that are enhanced by technology, which is different than saying we invest in manufacturers of consumer electronics or we invest in software companies.
And that's precisely the reason we gave you a copy of the prospectus, because we want you to get in the habit of actually looking for the strategy, the stated strategy of the fund in question, because oftentimes that will be the clue or the singular sort of resource where you can look and you can see that the strategy itself indicates this is not a single industry, this is not a single country type of fund. And that's where you're supposed to go, because what the definition says, they have a stated policy. Well, the stated policy means the strategy. So you really need to go there to make that determination.
Yep. And I think this is we didn't pick this one by accident. This is a close case. This is one where you really need to dig fairly deeply to figure out the solution. And this is an area where consulting one or more of those opinions referenced in the guide may be helpful to you, because both of them provide specific guidance about making this determination. So while we were worried just a minute ago, it turns out we seem to have a diversified mutual fund. So it's one, probably not reportable, but thanks to the filer for disclosing it and giving us an opportunity to analyze it. And it's going to qualify for an exemption in 2640, which of course are the exemptions to 18 Usc Section 208. And again, if that doesn't mean anything to you, if you're a brand new reviewer, I would direct your attention to the playlist for conflicts of interest that's in the materials. That has a few hours worth of discussion about that law and exemptions. All right, so feeling a little better now. The other one is causing us a little bit more of a concern. So I'm not sure if you know what Vmware is, but we're about to go find out. And what we're going to do here is we don't have information about this. They didn't give us a ticker symbol. The filer didn't tell us if it's a salary or pension or a receivable or whatever.
A bond or...
It could be lots of things. It just says Vmware. So we're going to assume that this is a stock holding. And the reason we're going to do that is because a stock holding creates sort of the most fulsome of potentialities for conflict of interest. It creates what we call a full 208. So if you have an employee holds stock that doesn't qualify for a regulatory exemption, we treat that as if the employee owns the whole company as an individual. So any matters that affect the company, they'd be prohibited from participating in. So because that's the most expansive recusal standard, we're going to make the assumption that that is so.
Exactly.
So we're going back to the guide, which is a good habit to get in because it contains lots of good information for us. So this describes what stock is. It basically represents a share of ownership in a corporation, and it entitles the holder to a claim on corporate assets and earnings. Basically, it means you own it. So if you have stock in a company, it means you own the company. There are different kinds of stock. For our purposes, stock's kind of stock. So the ownership interest is what we're really concerned about. And then we have some information about how to report it. And of course, if our employees are very nice to us, they include the ticker symbol. Sometimes they are, sometimes they aren't. The nice thing now is we have the internet, so we can go find out what the ticker symbol is and do our research fairly readily, which is what we're going to do right now. So let's go take a look at VMware. So here we are on VMware's website, which seems like a sensible place to start. And we have some information. It's that they're a virtual machine company. They make software products that allow for remote computing that are used in a lot of workplaces, in a lot of government workplaces. And that's important because our filer, Jill, is the deputy CIO. So VMware may be a current vendor at our agency. We may be currently using them to provide network solutions for our employees. They may be seeking to do business with our organization. They may want to replace whoever it is we're using right now. So this is a little bit worrying for a deputy CIO. So there's definitely a nexus between VMware, which is a publicly traded company. We could go on to the search engine of our choice and look it up and find the share price. But we have a company that works in the enterprise IT space that is a stock holding probably of our deputy CIO. So we're going to have to ask some questions here. And those questions are going to be, how much stock does our filer have? Because if Jill has more than $15,000 of stock, we have a real problem. We're going to need to do something, either keep her all the way out of VMware or ask her to sell the stock. So that's going to be something we're going to need to know. We're going to want to find out, is it currently related to our duties? Do we have current matters pending with VMware? And if we do, we need to take action pronto to make sure that's resolved. And then we can look at whether an exemption might apply. In the case of your deputy CIO and VMware, especially if they're a current vendor, I would think really hard about asking this person to divest, to just get rid of the stock holding so that we know we don't have to monitor it. We don't have to worry about if it creeps over the threshold. We don't have to worry about sort of an intersecting problem with procurement laws. We can just take care of it very cleanly and say, you're not going to hold VMware while you're the deputy CIO, especially if they're a current vendor or if they're someone who regularly seeks business with our agency. So this is a place where I think we want to pick up the phone today.
Right.
We want to talk to Jill right now.
Exactly, and I think that this is the reason we talked about trying to do a priority in your pre-review, try to do a priority list of things to take care of and to look into, so you can identify things that are of immediate concern and of the greatest risk, and not wait until you've completed the entire review of your report, to go back to the filer on things that you should be acting on with alacrity. So VMware is one that we know we need to jump on, and we need to jump on it quickly.
Absolutely.
Okay, so Patrick has talked about the things that I think are perhaps most familiar to us. These are, mutual funds and stock holdings that might be common things that we see on 450s, but they also, I think, are a fairly straightforward 208 analysis that you do for both mutual funds and for publicly traded securities. So now we're going to move into the two other assets that we have listed here, or holdings that we have listed here, which are Pepco salary and pension, and City of Philadelphia salary. Now, reviewing this from the standpoint of the Office of Government Ethics, I feel fairly safe in saying neither of these gives me tremendous heartburn from the standpoint of Pepco is not something that I would anticipate our CIO would be in any way involved with or be able to in any way affect. Similarly with the City of Philadelphia. What I do want to be careful about, though, are other types of employment interests that may involve financial interests that are not just Pepco, but that might be IT related, for example. So whenever you have an employment interest, and this is going to apply to both our analysis of Pepco and our analysis of the City of Philadelphia, you have to be thinking about the entire universe of interests that are associated with employment. So while they've listed salary and pension here, which are most typically things we're going to see with an employment interest, we might want to, particularly in the case of our spousal employment, which we're assuming that Pepco is the spouse's employer, because as we saw on Tuesday when we looked at the remainder of the form, it appears that the City of Philadelphia was listed as an outside position for our filer, which is no longer held. So our assumption is that the City of Philadelphia is referencing a former employer of our filer. It stands to reason that Pepco then is the spouse's employer.
Okay.
So because that's a live employment arrangement and we don't know anything about that employment arrangement, we would want to find out potentially what position the employee's spouse held in the company, because sometimes higher ranking officials, particularly in corporate settings, are entitled to benefits such as profit sharing plans and or stock holdings that give them a direct tie into the overarching health and well-being of that organization, so that it's such that the spouse's interest in their employment is effectively an interest in anything that can affect that outside entity.
Absolutely, and I think especially with new entrant reports, we find that a lot of new employees and their spouses are not super familiar with the total compensation packages they receive from their employers. And that you might want to ask some targeted questions about what they might have, especially if they have a sort of senior seeming position. You know, like, do you have stock options? Do you receive a bonus or other incentive payments based on the performance of the company? Do you hold different stocks and funds in your retirement account? Because there's, it's not uncommon at all to find people say, you know what, I never really look at that stuff. I'm not sure what all it is. And for our purposes, as you point out, we really need to know, because the differences make a difference.
Yes, they do. And while we're not going to delve into, because we just don't know, we simply don't have information about any other interests that the spouse might have by virtue of their employment. What we do know we can start acting on right now, which is they have a salaried position with Pepco, and they have a pension. Now, what we don't know is what kind of pension they have. So we would want to go back to the filer. We could go back to the filer and ask them directly, but I also did a little spelunking on my own, again, to inform myself so that I can go back with some better educated questions to the filer based on some preliminary research that I did for myself. And I looked online and I noticed that they said that they had a defined contribution plan, and I looked up the Securities and Exchange Commission Form 11K for this plan. Now, the one I found was for fiscal year ending July 1, 2018, so it's not the most recent, but I pulled it just to give you as an illustrative example of the kinds of forms that you can find online that can give you some information about these things in advance of going back to the filer and asking them. So what this SEC form tells us is that the plan is a defined contribution plan that's established by Pepco Holdings. It gives us a lot of other information about what the plan consists of and who is subject to the plan. And then so for our purposes, since we know it's a defined contribution plan, the review guide tells us if you have a defined contribution plan, what is the nature of that kind of a retirement plan as juxtaposed with a defined benefit pension plan? And a defined contribution plan is like our TSP. It's a plan where the employer establishes a set of funds for the employee to contribute money and to typically make selections among a variety of different types of investment vehicles. These are tax deferred plans. But it's the employee, him or herself, has an ability typically to make choices among a variety of different investment options. That's distinguishable from a defined benefit plan. A defined benefit plan is like our FERS system, where the employer promises a certain income stream to their employees upon retirement that's based upon a separate funding mechanism that the company itself maintains for purposes of paying out those retirement benefits. So for our defined contribution plan, what do we want to see on the form? We should be seeing potentially underlying holdings, which is to say, what are those funds, what are those investment decisions that the employee has made on their own behalf in the context of this fund? And then we'll talk about whether and to what extent those underlying holdings are reportable, because oftentimes they consist of diversified mutual funds,
Right.
and if they're diversified mutual funds, they don't have to be reported. But we need to know what the spouse is invested in the context of their defined contribution plan.
And I think that little bit of research you did to find out that they have a defined contribution plan allows you as a reviewer to ask much more targeted questions. It's very helpful to be able to say, I know Pepco has a defined contribution plan. Is that what you meant to report? What's in it? Saves us a round of questions that we might ask, because we may just go back and say, what kind of pension is this? And they say it's a defined contribution plan, and then we have to go back and say, okay, now give us the underlying holdings. So by looking and asking the question more precisely, we can save time and get to the conclusion of the review more quickly.
And going back to the SEC filing, if you look through the SEC filing, that also gives you a sensibility about the nature of the kinds of funds that the company makes available to its employees from which they can make choices. They have target date funds, which are typical of retirement funds. TSP has them. It's, if you're going to retire in, 2021, it's an investment strategy that is used based on the date that you're planning to retire from the service. Actively managed funds and passively managed funds. It's just giving us an idea of the nature of the kinds of funds that they're offering. The thing that I've marked in red here, obviously, is the big ding, 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 and it was for me. They have a stock fund in their defined contribution plan, which is an Exelon Corporation stock fund. And you're like, oh, Exelon Corporation stock fund. It's Exelon is the parent company of Pepco. There was like merger, I guess, of Exelon and Pepco. But the stock that they're offering a stock fund which is made up of Exelon Corporation stock. So these are useful things to know, because Exelon is you want to find out what Exelon actually does. So if you look up the Exelon family of companies online, they'll tell you they're a Fortune 100 company. They do everything in the energy business, power generation, competitive energy sales, et cetera. So if your agency is engaged in somehow regulating the energy business, for which, Pepco and or Exelon would be a prohibited source, would be potentially a prohibited holding, would somehow, be of concern to you, it's important to know that this is something that they can have in their defined contribution plan. That defined contribution plans aren't always comprised of just sector and diversified mutual funds, that oftentimes you can actually directly own stock through a defined contribution plan, or a fund that consists basically of the company stock.
Yeah, I think that's something to keep in mind. Oftentimes, a defined contribution plan, such as a 401k, is basically a tax designation for an investment account.
Yes.
Right? The 401k refers to the section of the tax code that allows the deferral of capital gains while they're being held in the account. And depending on who manages the defined contribution plan, you could have access to any publicly traded company in the United States, or maybe in the United States and some other markets. So there's definitely potential for holdings that pose conflicts of interest, which is exactly why we require the underlying holdings, if they're otherwise reportable, to be reported so that we may analyze them for potential conflicts.
Absolutely. So in this instance, that gives us a heads up that at the very least we know that they are probably contributing to the defined contribution plan. So we're going to want to find out. We can go back to the filer and say, we know that this is what the defined contribution plan kind of looks like at Pepco. And so you can ask some more targeted questions about those things that you're most concerned about, whether or not the employee holds them. Now, if they have an investment, if they've invested in the stock or the stock fund, we'd want to find out what the value of that was to ascertain whether and to what extent any of the 2640 exemptions might apply in this case. And obviously this is going to be a concern if Exelon is somehow a prohibited holding or a disqualifying financial interest for your employees at your agency, or in this instance, for your deputy CIO at your agency.
Right.
And we're not saying whether or not, we're not doing that analysis for you, only you can do that analysis. We're just highlighting for you the analysis you would have to bring to the table by virtue of knowing that there's a possibility that this person is invested in stock and or a stock fund in Pepco/Exelon. So now we're going to turn to the City of Philadelphia. Again, we know this is a former employer, so by virtue of the former employment relationship, we know that our employee has, at the very least, a covered relationship with the City of Philadelphia. Again, for OGE's purposes, City of Philadelphia would not be anything that we would necessarily be concerned about. But your agency might very well be concerned seeing City of Philadelphia and wanting to counsel the employee about whether and to what extent there might be any matters where the City of Philadelphia would be a party to an agency matter that your employee could be involved in. What we do know, again, though, is that the employee has a 457 plan. And I happened to look up the City of Philadelphia, and it appears as though most, if not all, City of Philadelphia employees also have a defined benefit pension interest. So just for purposes of completeness, it's just important to know that you can ascertain that by simply looking on the internet and find out precisely what kind of retirement benefits the City of Philadelphia provides to its employees. So a 457 plan seems a little daunting if you don't know what it is. And then it also mentioned deferred compensation. So that sort of is new language and terminology that can seem kind of scary at first. But if you look in the review guide is very helpful in letting you know that if you see 457 plan, we are basically talking about, it's just simply a different kind of defined contribution plan. And 457 plans are typically the types of defined contribution plans you see for state and local governments. There are certain ones that are for non-government tax-exempt organizations, and they're different. The ones for state and local are 457Bs plans, and that looks like what we've got here. For those other folks, I think they're called 457F plans, and they're slightly different, but in both instances, they're defined contribution plans. And so what we just talked about with respect to our Pepco defined contribution plan is going to equally apply to our 457 plan.
Absolutely. And I think, when you see those four numbers plans, again, we're talking about a reference to the tax code. So this is a tax-advantaged investment account, basically.
Right. And so if you see like a 403B as well, a 403B is another type of defined contribution retirement account. And they just have slightly different aspects to them. But, for the most part, you're looking at tax-deferred, typically tax-deferred investments.
Investments.
Yeah.
And for our purposes, the analysis is the same, right? We want to know what's in it.
Right.
Right. The tax burden on our employees is of no concern for our conflicts of interest analysis. We need to know what's being held in that.
Right. And you can find out literally, you can pull this up on the internet because I found it there, what the actual choices are that City of Philadelphia employees have in their 457 plan funds. And they are, as you would probably expect, many just, sort of typical diversified, small income, small cap type of funds that are diversified mutual funds that are of no concern at all. And I wanted to look specifically to see if there was any reference to any sort of stock funds that would be of the ilk of the Exelon stock fund we saw for the Pepco.
Yep.
And you'll see here that you have small cap stocks and funds, and you have international stock funds. Patrick, you want to sort of explain why we wouldn't view these in the same way we viewed the Exelon stock?
Sure. So we'll touch a little bit on the international stocks. So if we think back to that definition of sector mutual fund, it says they have to have a stated policy of investing in one country outside of the United States. And when we look at these, they tell us it's total international stock index fund. So that's the world. Euro-Pacific, so that's the Pacific Rim countries and Europe. So that's more than one country. International stock fund, again, we're probably not going to find in there a stated policy of investing in one country. We could distinguish this from, say, we had the France fund. And if we had the France fund, we may have a sector fund that would be both reportable, and we would have to analyze for conflicts of interest. As the deputy CIO, I don't see a whole lot of possibility for that.
Right.
But, you know, if your situation were different, say you're at the State Department or USAID or some international organization, I don't know, there might be a possibility there.
Well, and I think that the point that we're trying to make here, and maybe it's obvious, but even if it's obvious, I'm going to state it anyway, is that this is the reason why you need to have some familiarity with the duties of the position for which you are reviewing this form.
Right.
Because you can have the same group of assets and holdings listed on two different reports, and for one position for which the filing is taking place, none of the things that you're seeing on the report would even remotely be of concern.
Right.
And you need not trouble yourself necessarily with you know, maybe even going into a lot of the details of or drilling down into it as far as you would if for another position where there are definitely there's a nexus between the duties or potential nexus between the duties and the stuff that you're seeing that they're invested in. So it's just really critical that you understand. That's why we're going into detail, even though we know that these things would likely not be a conflict for our deputy CIO. It's important for you to understand why they would be material or might be material if you were reviewing this under the guise of a different position.
Absolutely.
So we think that the 457 plan holdings are likely going to be diversified funds based on what we looked at on the website.
Right.
And if they are diversified funds, then they're not reportable. You don't have to report the plan even. You don't have to report it. And the 2640 exemptions would apply to the diversified funds as well.
Yeah, and I think this is somewhere just out of an abundance of caution. I might go back to the filer on a new entrant report the first time just to confirm. And that, you know, if we're going back anyway on the Vmware,
Yes.
I looked at your 457 plan. It looks like all of the holdings are diversified. Can you confirm that you don't have that, you know, if you have a 457, everything's diversified? Because at least then we're all on the same page, and also it's going to save me work next year because I can put that in the notes and we're good to go.
Yeah, and I wouldn't suggest for 1 minute that you don't go back and ask the filer for what the exact holdings are, and that's not what I was
No,
implying.
not at all.
I'm just saying that I think that we can feel, you know, maybe not quite the sense of urgency that we felt with, you know, Exelon.
Right.
From the standpoint, or with the Vmware, from the standpoint that it appears as though the choices that they had to make, among the choices that they had in the 457, it looked like
Everything's pretty safe there.
everything's pretty safe.
Pretty safe.
Yeah.
So if that were the only thing, this wouldn't be sort of a priority. Get back in touch with them right now.
Exactly.
Like the Vmware certainly is.
Precisely.
Yeah.
Precisely. Okay, Patrick, it's yours.
So we've completed part one,
Yes.
which only a few more parts to go. But I think we're coming to part two, which is usually the easiest part of the form to review. And our filer has reported nothing. And you say, well, nothing? You know, doesn't everyone have debts that they ought to report? And the answer is probably not. So if we look at the definitions here, we see what we do not report. We don't report mortgages. So that's a big one for most folks. We don't report student loans, credit card accounts, if they come from financial institutions or business entities that are granted on terms available to the public. So those kinds of loans, if you go to the bank and get one, not reportable.
Right.
Loans secured by automobiles, household furniture, appliances, also not reportable.
Not reportable.
Right. So if you have a note on your car, not reportable. And then loans that you owe to your spouse or to the parent, sibling, or child of you, your spouse, or dependent child. So family loans. So for most people, this is going to be most of their liabilities are covered in the do not report section. So what's left? Well, not a great deal. Personal loans between them and maybe friends or acquaintances or business folks might be reportable. And what we're looking for here really is gifts and gratuities that are disguised as loans. So, if you see someone that says, I have a $100,000 loan with 0% interest and a 100-year term, it's like, why? Because we wonder whether or not their official position or something like that might have influenced the offering of the loan, or if this is really a gift or a bribe in a different guise. But for the vast majority of your 450 filers, the typical kinds of liabilities they have from just sort of living their lives are going to be from financial institutions on terms available to the public in these categories that are not reportable. So nothing too surprising here.
Yeah, and the only other thing with respect to personal loans is that, and again, I'm not suggesting that this is going to create a great risk or liability, but if you have a personal loan with someone, that does create a covered relationship with that individual, and to the extent that it's someone who, I don't know, is a contractor for the agency or has some nexus to the work of the agency, that would be something where the employee would have to know that they would have to disqualify themselves from any matter that involved that individual.
Yep. Yeah. So typically we don't see too much here. It's usually pretty straightforward analysis. So that took a lot less time than part one.
It typically does.
Yeah. Which brings us to part three. And part three is just applies to the filer, and it requires the reporting of a prior employer, of any concurrent outside employment, including consulting or businesses that the employee owns, and certain outside activities. So let's take a look and see what we have here. So we have the reporting standards up at the top of the part. It's useful to look through that, and basically, positions that include officer, director, employee, trustee, general partner, proprietor, representative, executor, or consultant of corporation, partnership, trust, or other business entity, nonprofit or volunteer organization, educational institution, state or local governments. So if you have an outside job, basically, and that needn't be a paid position. If you're, you can be an officer or an executor and not necessarily be compensated, but that is still reportable. And then we have some do not reports, religious entities, social entities, fraternal, political, etc. So our first entry here, he reports the organization is the Cio Executive Council. The type of organization is a professional association, and the position is board member. So this is one of those times where the review of the 450 form may necessitate the beginning of a different process. And here, if your organization has a prior approval requirement for outside activities, this may be an indicia that you need to initiate that process.
Yes.
Especially for a new entrant. Make sure they get all the approvals, especially if you have supplemental regulations. Even if you don't have a prior approval requirement for the outside activity, we now know they have the outside activity, which means we need to fully advise them about the potential for not just financial conflicts of interest, but other ethics considerations. And we have a whole other massive open online course about outside activities analyses, which, if you're not familiar with that, I would encourage you to check out. But basically it means we're going to have to think about every single one of the ethics rules and provide advice. But before we do that, I think I'd like to find out a little bit more about what the Cio Executive Council is, to find out how rapidly I need to move into that process.
And I think one of the key things here, too, is it's not, if you look at the position that this person holds with this professional association, it is one of the positions which under 208 then imputes the interest of the organization to the employee
Right.
herself. So we really do need to know what the CIO Executive Council does, because while she is a board member, under 208, anything that she
Yeah.
would do that could affect that association in her official capacity would be deemed to affect her financial interests, because the entire organization's financial interests are imputed to her.
So for her, this analysis sounds a lot like our stock analysis.
Absolutely.
It's almost like she is the sole
is
and
the association.
complete owner of the CIO Executive Council.
Exactly.
And she's the deputy CIO.
Yes.
So I don't know. I could imagine a couple of maybe possible matters. I don't know. They might provide training. Procurement of training is a particular matter. It's a contract. They may provide materials or support or research that our agency procures and utilizes.
Mm-hmm.
So this is maybe not the same as the Vmware, but not too far from it in terms of urgency.
Yeah.
Yeah, so let's take a look at what the CIO Council does to see if it can help us find out whether or not we're likely to have a potential for conflict of interest. So it looks like it's an organization dealing with the duties of CIOs. It looks like there's a community of CIOs that comprise the council. And they use the experience of these folks to help advance their careers and their organizations, and they're committed to validating decision-making and mitigating risks, share advice among CIOs, develop business management capabilities of staff, and cultivate IT careers and advance the CIO role in today's competitive landscape. Mm-hmm. So it sounds like they help CIOs become better CIOs. Mm-hmm. And our person is a deputy CIO. And I think our suspicions about, there might be training products or research products that we may be interested in buying for the agency or for employees of the agency or for staff members of Jill. So we're probably going to want to have a chat about the potential for conflict of interest here, as well as some of those other ethics concerns that we always have with outside activities, like misuse of position, not using official time for board work, not using non-public information, not recommending or endorsing the council to other folks. So we're going to have a fulsome discussion, and
Yes.
It looks like we have a sufficient nexus here that we probably want to get on that pretty quickly.
Yes, absolutely. And I think that depending upon the answers that you get, you might very well have to consider asking the individual to consider resigning from the position.
Right.
And again, that's a determination you're going to have to make based upon the facts that you have at hand. And that's very much dependent on whether and to what extent you believe that there could be some opportunities for the deputy CIO to be advancing the interests of this CIO Executive Council in the context of her official duties.
Absolutely. And just for completeness sake, I would draw your attention to an exemption in 5 CFR 2640 for official participation on boards of nonprofits. So if this was something where the CIO, say Jill's boss, said, it would be good for our agency to have someone participate on that board. That may be a possibility. It could take care of the 208 concern if the person is officially assigned to that role. We still have other concerns. It doesn't clean up the whole matter, but it does make things a little bit easier. So if you're a new reviewer, I wouldn't recommend you sort of execute that exemption on your own, but it's enough to be aware that it may be a possible remedy in appropriate circumstances. Mm-hmm. Here, I'm not so sure. We may just have a robust set of recusals and allow things to continue. We may consider resignation, but it is a possibility.
Yes. So the next position we're going to look at that I think is an interesting one is the Electronic Frontier Foundation. They've listed the type of organization as a coalition, which is kind of a little mysterious, I think. And they're also showing that they are a volunteer and a member. Now, when we look at the directions for the types of positions that we contemplate should be reported in this section, it appears that it's, positions include an officer, director, employee, trustee, general partner, proprietor, representative, executor, or consultant of any of the following. Volunteer member doesn't seem to fall into that ambit comfortably. It seems to be maybe not quite important enough to qualify for reporting. What I would suggest to you is before you dismiss anything out of hand as being over-reported and therefore not worthy of review, that if they've placed it there, and particularly looking at what the nature of this, just by virtue of its name, appears like it might have some connection to information technology, it's Electronic Frontier Foundation.
Yeah.
It's worth your while. This is one of those times where it is worth your while to take a look at it, inform yourself about what the organization is before you automatically dismiss it as it's over-reported, I don't need to look at it, they shouldn't have reported it, and to ignore it and move on.
So we should not just get out our electronic correction fluid, remove it, and pretend we've never seen it.
Precisely.
Yeah.
Precisely. So, again, this is one of those things where if you have a prior approval requirement, you have to know whether or not this type of position would or wouldn't be subject to your prior approval requirement. Again, that's not something that we can necessarily answer for you, but it's something that you should ascertain for yourself.
Right.
And I think that if we look at what EFF is, and they do have a presence on the internet, and we look at them, and it says the Electronic Frontier Foundation is the leading nonprofit defending civil liberties in the digital world, champions user privacy, free expression, innovation through impact litigation, policy analysis, grassroots activism, and technology development. I think that just based on that paragraph alone, it gets even richer the further down you go. I think from that paragraph alone, we get a real flavor for the nature of this organization.
Right.
And I think principal among those attributes is I would call this an advocacy organization. So if it's an advocacy organization, Patrick, what are some concerns that we might have, even if this is a non-paid position, even if this isn't employment, even if this has, that has no attachment firmly to 208, what other things might we be concerned about?
Yeah, I think we're concerned about some of those other laws under Title 18. Principally, I'd be concerned about 18 USC Section 205. And if you're not familiar with 18 USC Section 205, this is the prohibition on representing third parties back before the government as a federal employee. And that's to the whole government. Mm-hmm. So maybe you work at the Department of Agriculture and Jill's your deputy CIO, and you say, you know what, the Electronic Frontier Foundation is not going to be advocating to USDA for more internet freedom. They're going to be advocating to the FCC, for example. Well, Section 205 doesn't care.
Exactly. It is utterly indifferent to which part of the executive branch you're directing your advocacy.
So regardless of whether you work at the Department of Agriculture or the Department of Energy or the Federal Communications Commission, you have the same problem, which is that you can't represent third parties back before any part of the government. So that would be a standout concern. The potential for misuse here is maybe a secondary concern. You could see use of official time, non-public information, or even advocacy in the workplace in the form of endorsement.
Mm-hmm. Yeah, so there's a whole panoply of ethics law and regulation that we would have to be concerned by. Again, notwithstanding that this is a volunteer position or a mere membership in the organization. So again, I wouldn't allow sort of the technical over-reporting aspect of this to sort of steer you away from doing the analysis, because you can have some serious ethics concerns with precisely those types of outside involvement.
And I think this is a good place to make a little bit of a programmatic point. The financial disclosure system is designed to balance employees' privacy and the efficiency of review with the need to manage the potential for ethics risks. So just because something's not reportable doesn't mean it can't pose a problem, and vice versa. So this is something that I might want to cover in training. If you have folks that are involved in this kind of thing, say, we want to help you do these kinds of civic activities, but we want you to do them correctly and avoid problems. So if you want to become involved in those, you maybe don't have to put it on your 450, but please come talk to us so we can let you know where the edges are, so you don't accidentally get in trouble, because that's really what we're trying to avoid. No one wants that.
Yeah, because at OGE, for example, we don't have a prior approval requirement, but as part of my new employee orientation, I always inform people that, in particular, 205 is a trap for the unwary, and
Right.
it is. It's a very broad statute. It winds up covering behaviors and conduct that I don't think would be intuitively obvious to any number of people, and I think that it's important that employees be aware that there are some dangers out there. So the seeking advice isn't with a view to prohibiting people from rightfully engaging in private activities.
Right.
It is simply a matter of making sure that you're protecting them when they do so, but you're also protecting the agency's equities as well.
Absolutely.
So, and we didn't cover City of Philadelphia because I think we have fairly fulsomely covered City of Philadelphia for purposes of what was disclosed on part 3. So we're going to move on to part 4. Patrick, if you would like to.
Absolutely. So part 4, we're going to have agreements for outside employment, and this will include teaching, speaking, and writing. We'll also see retirement and other benefits from prior employers, as well as any leaves of absence. So let's see what we have here. Our first entry is with the University of Maryland, and it looks like it is an arrangement or agreement for future employment, which is to say this person is telling us they're going to teach a class at the University of Maryland in the spring, which is pretty soon.
Yes, like
That's
now.
Pretty soon. So this is another case where if you have an outside activity prior approval requirement, this may commence that process, and you may want to do that. Even if you don't, you should provide full advice on this outside activity. So if you have a prior approval standard or form or process, make sure the employee knows to go through that process because, again, we're talking about a new entrant. That'll be equally true for an annual that you hadn't seen, but on an annual report, you may be able to look in the filer's file and see we've already done this. We've given them the advice. They've been approved, so we can move on. With a new entrant, you're probably going to have to start from the beginning. So do we have issues or concerns here? Well, we do have a regulation that's specific to writing, teaching, and speaking, and that's 5 CFR 2635-807. So we're going to want to pay special attention there when we're conducting our outside activities analysis. And indeed, in the outside activities massive open online course, we cover a situation almost just like this. Potential for conflict of interest, I guess that depends on your agency. And I would be very cautious when thinking about 208 with respect to universities, because oftentimes we have sort of a blind spot for institutions of higher education. We say, how can that really be a conflict of interest? But we have a lot of employees who are maybe engaging in teaching activity, are invited to speak as experts in their field by universities, who are currently attending maybe as part of their official duties classes or professional enrichment opportunities. And we may buy things from universities like research or publications. And in this case, we might have an employment relationship that would mean that the university and Jill are basically the same, just like the stock holding.
Right.
So this might not look like a big concern, but I think there is some stuff to be worried about. And just to give you an example, so say our filer is a full professor, and she's teaching this class in the spring and maybe has done for some time. So she's an employee of the organization. She says, I have a subordinate who would really benefit from a class at UMD. I was there the other day. I saw it on the advertised on the board. And she goes into the workplace on Monday and says to her subordinate, she says, you know what, you should really consider signing up for that. You put together the training request and I'll sign it. Well, we've just had a 208 violation.
Absolutely.
Likewise, if Jill is going through the teaching of the class and gets to the section on security, internet security, and says, you know what, our chief security officer really is good at documentation for security systems, and I think she would be a great addition to my seminar. And so when she gets to the back to her office at Maryland, she fires off an email to that colleague back at the agency and says, you know what, would you like to join us as an instructor for this week? May have just violated 18 Usc Section 205.
Absolutely.
So there is some risk here. Are they manageable? I think absolutely they're manageable, but it is something you don't want to ignore this. You want to focus on it and provide as complete advice as you possibly can.
Mm-hmm. We have one final entry to cover, and even though we've we've pretty fulsomely covered this with respect to Part 1. The 457 Deferred Compensation Plan, as it is being disclosed here, is probably overreported, because if we look at what you do not report with respect to agreements and arrangements, we say that you don't have to report a continuing participation in a defined contribution plan, such as a 401k plan, or in this case, a 457 Deferred Compensation Plan, to which an employer is no longer making contributions. So the presence of this on the schedule sort of beggars the question, is your prior employer continuing to make contributions to this plan, and that's the reason that you have decided to disclose it? So this would be something we would want to follow up with the filer on, confirm that there are no further employer contributions. And I have noted on there as well, No. 209. And the reason I have listed on that form No. 209 is because when it comes to unusual arrangements when someone leaves a place of employment to come into the government, and we sometimes want to look into those. And I think having an employer continue making contributions to a retirement plan after someone has left that organization is quite unusual.
Right.
So if that is actually occurring, we want to make certain that the reason that that's occurring is a customary part of the employment agreements and benefits that that employer offers to all of its employees, and that it's not in any way being offered because Jill is coming into government service. And we see this sometimes with respect to leaves of absences from universities, or sometimes from particular benefit packages that some entities give employees when they go into government service, that they have a policy of if our employee is going on a leave of absence to go into government service, we offer them additional benefits that we don't offer if somebody's going on a leave of absence to go someplace else.
Right.
So whenever you see an agreement or arrangement from a prior employer in the context of a leave of absence, or in this case where it looks as though they may have inadvertently reported it here and just didn't realize it wasn't reportable.
Right.
But if the answer is yes, my prior employer is continuing to contribute, that is certainly something you're going to want to follow up on, because it is unusual. And then anytime those kinds of benefits are being offered because of government service, we have a potential 209 concern.
Yeah, and we do see this less often on the confidential financial disclosure reports, because usually people are coming in from more sort of just regular salary type positions.
Mm-hmm.
But we do see with some political appointees, if they're coming in where they were serving on, say, a corporate board or something, and it's not even necessarily nefarious on the part of the company.
Right.
They say they're taking a big pay cut to go engage in public service. We'd like to help them with that, so we're going to come up with some plan to sort of plus them up. Mm-hmm. And unless that's pursuant to an established policy that's not specific to federal employment, it may be violative of 209.
Mm-hmm.
So we really have to do that analysis, and it isn't, I don't think that people are trying to buy favoritism, but they're trying to reward public service. But the law is sort of indifferent to the motives, and says that if the reason that you're giving this payment is because of their service to the government, that's generally prohibited under 209. So.
Now, without complicating matters for you, we flagged 209 in this instance because under most circumstances, if a former employer is, as I said, offering a benefit that seems to be in any way that's unusual and seems to be tied to government employment, that's a prospective or a potential supplementation of salary issue under 209. If you look at 209, you will find that there is an exception for funds that are coming from a state or local government. So in this instance, because it's the city of Philadelphia,
right,
they're a local government, and 209 is not going to be a concern, simply because state and local governments happen to be excluded from the coverage of 209. But so in this instance, we know 209 is not a problem because it's the city of Philadelphia,
right,
but we wanted to flag it as a 209 because not every time are you going to be dealing with a state or local government.
Yeah, and I think that's a good sort of finishing point, is to keep your eyes open. We focus so much on the 208 conflicts of interest when we're doing these reviews, and just keeping your mind open to the possibility of other attendant ethics concerns is really important and can help you provide more complete advice and hopefully avoid some problems.
Well, that is our coverage of this review for today. I hope that you found this helpful. I hope that you all had an opportunity to try to practice doing this yourself so that you could see maybe where you got it right. And things you may have missed. This is something where the more you do it, the better you get at it.
Absolutely.
So don't feel intimidated if there were things that you didn't get off the bat today. We gave you a copy of a completed exercise worksheet that's on the IEG site. So if you have some questions, you can, things that you maybe think you missed, you have that as a reference tool to look at. Also, obviously, the broadcast remains on the IEG for you to come back to and revisit at your leisure.
Absolutely. And remember, the guide is available and it contains valuable information to assist you in your reviews. So we wish you a productive and useful confidential financial disclosure season, and we'll see you with another broadcast on the other side of the National Government Ethics Summit.
Thanks very much.